Hey everyone, it's Tony Pacione, Managing Partner of Gasima Global Asset Management, and I'm here to talk to you today about the use of trust in your financial planning. Look, not exactly something that rolls off the tip of the tongue for everybody, but especially when caring for someone in need or looking to make bigger life decisions and legacy planning, it's something that we need to talk about. So let's assume, for argument's sake, that you've already mastered the basics, that somewhere along the way in your investing life cycle, like I like to talk about, someone told you to have a long-term savings account or a retirement account or a 401k in your workplace, and you live below your means and you've accumulated some wealth, maybe even a fair bit of wealth, and you're starting to think about the next generation or those around you, or just the future in general. It seems like the investing life cycle might have skipped a few chapters, though, if that's where you're at. You see, you start to build up your wealth and savings and even just come into some money, whether through inheritance or stock options from a tech job, and boom, you leap from building wealth or saving to now starting to think about preserving it or creating a legacy for yourself or just enjoying it. I mean, it seems like we almost went from middle school graduation gift money to a 401k to getting a will and life insurance. I mean, there's a lot of steps in between there. And creating a legacy and strategically planning about how to set up trusts could really come in handy when you start to think about what to do with the wealth and your savings that you've accumulated. So let me start with a disclaimer, first of all, that I'm not an attorney and I'm not seeking to give any expert advice on trusts and estates, but what I am trying to do is give you the basics. That being said, in my travels as an investment advisor and in my personal life, more importantly, I've had to get smart on using trusts. And for some reasons, the basics of this topic just aren't available. And this is incredibly important stuff. And let's be clear, the accounts via which we invest can get ever more complicated for ever more complicated reasons, depending on what life throws us. So it's not to skip through this part, but more to back up and drill into our heads, much like the retirement planning industry has done, that you need to have a 401k account, you need to have an IRA. Well, you also need to learn the basics of trust and what they can do for you. Now, in general, it's as easy as this. There's two different types of trusts. There's something called the irrevocable trust and a revocable trust. And by their name, they clearly imply the common sense difference between the two. One can be revoked and changed, and the other cannot. Now, why would someone do that? Well, what it means in practicality is if you want to make any changes in a trust, then a revocable trust is the way to go. The assets don't leave your hand, things are still in your name, but for planning purposes, they work well. Any assets transferred to that trust are still yours, and so you still control them. Now, with the irrevocable trust, upon transfer of the assets to the trust, the assets have left your name and the transaction is permanent. So why would one choose one method over another? And why use trust in the first place, now that I think of it? Well, look, the hope is that by using trusts as an estate planning tool, you can care for the ones that you love after you're gone. For example, transferring assets to a revocable trust can be cheaper and more efficient than gifting your asset via a will and help avoid the probate process, which is a undue cost and burden to the surviving family members that may not have been planned for properly. Now, an irrevocable trust may be used by those wanting to minimize estate tax or to protect assets from lawsuits and other creditors. Another use of the irrevocable trust is also to aid in maintaining access to government benefits. A strong example of an irrevocable trust, and actually something really near and dear to my heart, is a special needs or supplemental need trust. My family has been blessed and challenged with the care for a disabled loved one. And anyone who has a child or a family member with a disability or someone in their life that's become incapacitated because of an accident knows the immense emotional and financial burden that can place on a family. And when the need is obvious, families typically apply for and receive some kind of government assistance via Social Security and Medicaid. And the program for disabled people actually will render monthly checks to you through a program called Supplemental Social Security Income, or SSI. Sounds great, right? Well, to be clear, even the most generous state-funded programs for disabled children are going to yield approximately $700 a month, or in the best case scenario, maybe a little less than $1,000 a month of disability checks. So look, the unfortunate truth is you're going to need to privately finance the care of the loved one by yourself. And that is where an irrevocable trust in the form of a special needs trust can come in handy. Because look, at the end of the day, we all seem to try to get our retirement plan together. This is just a retirement plan for the loved one who unfortunately can't save on their own. And the beauty of a special needs trust is that you can save or even ask relatives to gift money into that account and still keep all those benefits from the government intact. Grandparents can leave money to the trust. There's even other accounts that go alongside the trust called an ABLE account, where it's almost like a 529 for disabled people, where you can put up to $18,000 a year without exceeding the annual gift tax exemption into that account and not even endanger any of the eligibility for any of the government programs. And the beauty of that is that you can make distributions to that disabled person tax-free. Let's be clear about one thing. You have to act, and you have to engage the right professionals. I've been there. I put together my son's special needs trusts, ABLE accounts, and all his planning by myself. Now, I happen to be a financial professional, but at the end of the day, it wasn't like there was a billboard or a Google ad that said, get your special needs trust here. And look, to be clear, it's not like you need some type of special trust administrator or to pay fees upon fees for someone who only works for administering special needs trusts. In fact, you have to watch out sometime for a lot of scams in this place. Sadly, there are those, and there have been some cases here in Florida recently where people want to take advantage of special needs families and have taken millions and millions of dollars from those accounts. So don't be scammed. There's no need to overpay. There's no need to be overwhelmed. Everything that I'm talking about here can be done in a transparent and efficient way, and is easily accessible online, just as easily as anything you've ever done in any other brokerage account or for retirement planning that you've done. And my point is this: you can do this, and it's actually pretty easy. But like my talk recently on having a plan, you need to get a plan together and you need to act upon it. And I'd love to hear from you on how I can help, since I have personal experience in this area, and I can't tell you how sad it makes me when I speak to other families with special needs members that don't know anything about the power of trust to help ensure your loved one's well-being. So as usual, the investing life cycle always applies, and it's no different here. Feel free to reach out on our website at www.gasimaglobal.com to book an appointment or to find out more.